All right, so I want to welcome everyone to the Business Accelerator membership. This is our monthly webinar, and today I'm going to get back to my original work, my original roots in finance and banking, and we're going to talk about the fundamentals of finance for business owners. And the reason why this is so important is that as a business owner, if our money's not right, then it's really hard to confidently move forward in a lot of other areas if we're worried about our finances. But there's some things that fundamentally we skip as business owners that are really important to the kind of the overall vibe that we are trying to put out there in our business. And so in getting into this right now, like what I want to kind of talk about is kind of what those fundamentals are. And we're going to start with protection. We're going to start in that particular area. And I know that's not the sexiest thing, because a lot of times when we talk about protection, what we're talking about is we're talking about insurance, things like that, estate planning, all that kind of stuff. But it's interesting. I just led a workshop this last week, and despite all the work that I've done with companies like Wealth Factory and working for Wells Fargo for a long time, I've talked a lot about personal finance. And even though we talk about all these concepts, we still run into business owners who don't have life insurance, who don't have an estate plan, who haven't really thought through their philosophy on how they're going to use insurance. And so, as we talk about, insurance, the biggest challenge for us is that personal finance is personal. It is something that is specific to us. It's specific to your particular situation. And I think a lot of times what we do in finance is we want to find someone who can tell us what the roadmap should look like. Give me the financial blueprint that I need, and then I'll go out and execute that blueprint. Well, there are some fundamentals in finance that I think need to be a part of everyone's financial process and consideration, but how those vehicles work and how they're set up and structured really is going to vary upon individual. What are their goals? What are their family makeup? How do they want to leave money to their heirs? Do they want to leave money to their heirs? Like, all these things are considerations that you want to have as you think about like how you want to move forward. So the biggest challenge with personal finance is that it is personal, and there's not a one size fits all solution to do that. Now, when I worked at Wells Fargo, one of the things that we noticed a lot in finance was that we tried to make it a one size fits all, right? So if I'm an insurance guy and I work for Wells Fargo, I just want you to probably buy, I want you to buy an insurance policy. And I'm going to tell you that insurance is the best thing to do, right? So if you're cast with a dilemma here of should I buy life insurance or should I invest in securities? It doesn't matter what your situation is. If I worked at the bank, what I was going to tell you was buying insurance was the best thing. Now, on the flip side of that, if I was in securities and you had this same dilemma, of course, I'm going to tell you to invest your money in securities. I'm not like, don't worry about that insurance crap, man. Like, you don't need to worry about that right now. Like, let's get you in the market, because, the longer you're in the market, then the better off you're going to be. I mean, these are the dilemmas that a lot of people are running into when it comes to personal finance, is that depending on who you talk to, you're going to get a completely different story and a completely different philosophy on how you should run your finances based upon the products that I have to offer and sell. And I don't believe in that. So what I'm not here to do is sell you a product. I'm not here to give you advice per se. This is information. This is not advice. So I am not an accountant. I'm not an attorney. I am not licensed as in securities. None of those things are true. So this is information that you should take back to whoever your professional team is. Hopefully you have one, so that you can vet what we're talking about here and see what fits best in your particular situation. So personal finance is personal. And like I said before, I have worked in finance for a long time. I worked in banking and finance for about 9 years for Wells Fargo. I left Wells Fargo. I worked for a small financial services firm called Ingenuity Financial for a couple of years, and we did financial coaching. And then as part of my business and what I do in business coaching, I worked with and partnered with a financial services firm that was for entrepreneurs for like 13 years and worked with that company and helping their clients on the business side, but also being heavily involved in the personal finance aspects of that. So I have worked in financial services for a long time, and I've seen dang near every product that you can have out there. So so we'll go from there. And if you need some support and help with a particular product or service, we do have partners that we work with that we would recommend for you to look at if you want someone to really do it well and do it right. So so as we talk about finance being personal and the challenge with that, the first thing is that great financial planning takes vision and it takes planning. And so the question for you is, what do you want out of your financial life? Like, what does success in your finances look like for you personally? How do you want to spend your money? How do you want to spend your later years? Like, do you want to retire? Do you want to work? What does that look like for you? There's no right or wrong answer. What are the things that make you most comfortable? All those kinds of things need to be considered when you talk about building a financial plan. You've got to understand, well, where do I want to go in the future? As my life progresses and I get older, what are the goals and things that I want to achieve in that process? So vision and planning is a big part of that. And then building a financial plan takes patience and it takes communication. So the patience part is, you know what? Financial independence doesn't happen overnight. This is a process. You've got to understand, well, what is my financial independence number? How do I work towards that so that I can be financially independent? And when I'm financially independent, now I'm not tied to my business. I'm not tied to my work. I have freedom and flexibility to go do things that I want to do with my time, and work may be one of those things, but there are going to be times where maybe you don't want to work. And so you've got some freedom and flexibility, but that takes some patience. You know, for a lot of entrepreneurs that I talk to, I say about 5 to 7 years to really get to that place. Now, some people do it sooner, but some people take even longer than that. Just depends on where you're starting from. And then the communication part, this is what's really important. So if you're in a committed relationship, right? If you've got a spouse, a partner, long-term boyfriend, girlfriend, whatever, you got to communicate. You got to be on the same page. You've got to make sure that your philosophies are aligned at some level. And so if you're not talking about that, and if you're not in that place, this is probably where some of the biggest marital discord happens, is around finance, because couples are not on the same page with finance. They're not really talking about it. And so it's important to really make sure that you're discussing it and going over it with your significant other so that you guys are on the same page. So I can't stress communication enough. So now that we've got kind of the building blocks, in place here, I want to talk about some of the keys to finance. And the first thing that I think is so important is around budgeting. And budgeting really is about how I utilize my assets and resources that are coming into me in terms of cash flow. And so I'm not saying that you have to have a spreadsheet where you manage your dollars down to the penny. I'm not saying that at all. But what I am saying is that we need to make sure that we understand where our money's coming from and where our money's going, and have certain places where we have, allocated our money for specific reasons. And so I'm a big fan of having, different accounts set up, accounts for fun, accounts for paying for insurance premiums, accounts for investing, and all those things, so that you can separate your money when it comes in and put them in appropriate buckets that will allow you to be financially successful. Now, I'm not giving you like specific buckets to do that with, because again, that's a personal choice. Like, what do you think are the most important areas of your life that you want to make sure you set aside cash for, so that that cash is available to you? So for some of my clients, and we're going to get into life insurance, a lot of my clients that I work with have whole life insurance. And because they have whole life insurance, and typically one of the strategies that they do with whole life insurance is they overfund their life insurance policy. And what that means is they pay their premiums ahead of schedule, so that their premiums are completely paid in a short window of time. And that therefore allowing them and unlocking the access to the cash value in that policy at a much more accelerated rate. So because they're doing that, it's important to set aside premiums, because when you do that, your premiums tend to be significantly higher. So you've got to set aside that money to make sure that those premiums are there so that when your bill comes due at the year and you're going to pay for your whole year of life insurance for that particular year, you've got the money set aside to do that. That's important to do that. So that's why we really want to talk about budgeting. And part of budgeting we talk about is debt. And so I talk with people a lot about debt servicing. And so one of the things that we used to teach at Wealth Factory when I was working there was we would talk to people about what we call the cash flow index. And the cash flow index is really a tool to help us determine how do we pay off debt? Like, what's the best structure to do that? Now, in some circles in finance, what they may tell you is you pay off the debt that has the highest interest rate. But one of the things that I learned even when I was at Wells Fargo is that you don't pay an interest rate out of your pocket. You pay a payment out of your pocket. And so the real key there is, how do I determine what payments that I'm making are really eating up an inordinate amount of my cash flow on a month-to-month basis? And this is why, like, a vehicle loan or an auto loan tends to be a real cash hog, because the loan amount that you're servicing for the type of payment that you're making on that tends to be pretty significant, over time. And so how we determine this is we take the balance of the debt and we divide it by the payment. So whatever the payment is into the balance. And so we have some things that we look at here. If your number comes up over 100, that is not anything that I would worry about paying off anytime soon. It's not really eating up a lot of your cash. If it's between 50 and 99, that's something to take a look at and maybe consider, to kind of be aware of. If it's under 50, that is something that is an emergent debt that you would want to pay off as quickly as you possibly can. So a lot of times people do this. They notice their auto loans are under 50. Those are loans that I would pay off as quickly as you can. So if you get a windfall of cash and you're like, I don't know what I should do with this, pay off a debt with that. If you're not really sure what to do with it, you've got money in an emergency fund, then do that. So speaking of an emergency fund, right, that's cash flow and managing cash flow and debt. Speaking of an emergency fund, we want to have 3 to 6 months of expenses, at least 3 months of expenses in your monthly situation. Now, I look at this as the bare minimum expenses, right? So you probably have Netflix, like I have Netflix. Well, that isn't something that I feel like is absolutely necessary. That's something that if I really ran into some financial hardships, Netflix would be a thing that could go. Like, I don't need it. I don't need to have it. Now, I know for some of you, you may think, man, that's a need. And if it is, honestly, put it in your budget. That's totally fine. I'm not judging that. But, for me, I could get rid of Netflix. There's things I could get rid of and not have to keep. But some things like my cars, my house, obviously paying for, gas, groceries, things like that. I want to make sure that we have the money set aside to do that, to service our debt. So I'm going to keep that into consideration as I build an emergency fund for myself. And so in the terms of budgeting, you want to make sure that you have those kinds of things set aside. Liability insurance. So one of the philosophies that I've learned over the years in insurance is I want to insure myself for the catastrophic, the things that are just absolutely just so large, so big, so critical that that it would really make a significant impact if I had to pay that out of my own pocket. What I don't insure myself for is the inconsequential. Now, what I mean about that is when we take the area of liability insurance, this is something that really is misunderstood, because I think a lot of companies try to make this as they make it seem like a premium game, like the best insurance is the cheapest insurance. And if you look at Geico or Progressive or any insurance company, really that's what they try to tell you is the cheapest insurance is the best insurance. You want to save money, this is how you do it. The problem is you may save some money on the front end, but it may cost you a whole lot on the back end, that if something happens where you have to pay on something because you're in a significant accident, that exposure that you've opened yourself up to because you have the cheapest insurance you can possibly get isn't going to serve you well. And so here's some things about liability insurance that I want you to consider if you're a business owner. Number one, how can you raise your deductible? Most people I know that are business owners have $1,000 that they could pay towards a deductible. If your deductible right now is $250 or $500, raise that to $1,000. That is going to lower your premium. Now, in addition to that, I would look at your limits of liability and how much insurance should you get? Limits of liability, I would get as much as you possibly can afford. So, whether that be 100, 300, 250, 500, whatever it is, I would get as much liability insurance as you possibly could afford. And here's the interesting thing about doing that. It doesn't cost a lot to raise your limits of liability. It's actually pretty inexpensive. In fact, a lot of times I hear, car accident attorneys give people this advice, in commercials, things like that, like raise your limits of liability. It really isn't that expensive to do it. It's not. So you can get a whole lot more insurance for very less of a premium if you go through and do that. And so, here's the things that I'm not doing with my insurance. I'm not running my chipped windshield through my insurance. I'm not, if I got a little fender bender that's going to cost me under $1,000, I am not running that through my insurance. Why? Because I can pay for that. Like that stuff I feel comfortable of taking care of. And I don't want my premiums to go up because I'm running these inconsequential things through my insurance. So liability insurance is one of those things that, again, same thing with your home, raise your deductible as high as you can, and make sure you've got all the proper protections in your coverages that you want. There's a lot of times I see people who have car or home insurance that doesn't insure for full replacement value. So make sure you've got full replacement value on all of your stuff, and don't be left in a situation where now you've got, your home burned down and you've got to replace it, but you don't have the money in coverage to do that. Now you've got to come significantly out of your own pocket to do that. As an addition to your home or auto insurance, an umbrella policy is a great idea. This umbrella policy can really kind of cover some other things that may get missed in your liability policies, and you can get $1 million of umbrella policy coverage for a very inexpensive premium every single month. But now you've got that coverage so that you don't need to worry about this. Now, the benefit to this for us is we're talking about car and auto insurance. It's not sexy. It's not super interesting, but the real value and benefit in this is that you have people who you now have some peace of mind. You don't need to worry about your money being exposed to something that's going to happen to you, down the road potentially. So liability insurance, there's kind of a breakdown on that. Life insurance. There's 3 types of main policies that we typically look at: term, whole life, variable universal life. Those are the most common that I see, right? Term life is set on a set term. It could be 10 years, 5 years, 20 years, typically not longer than that. And once that term is up, you've got to get a new policy. Now, obviously the danger with that is the older you get, trying to renew insurance at that point for life insurance gets a lot more expensive, and it gets a little tougher to do. Whole life, or what they call permanent insurance, is something that you buy at a certain premium today, and you can overfund that premium to accelerate your cash value. But that is the premium you'll have for life. As long as you pay that premium, you've got access to that. Now, there's some riders and some different things that you can put into your life insurance that make sure that your payments, if you ever run into issues, you can take care of your premiums, things like that. But then you build cash value in your whole life policy that you can utilize for other expansion opportunities. I've had business owners who have bought and funded an additional clinic in a building with their whole life policy, and taking a loan out on their policy and being their own bank to finance an expanded location. So there's a lot of great benefits there. And variable universal life, if you're interested in the market and you want your money tied to the market within your variable universal life policy, then that may be a policy that you feel really comfortable with, that can function like a whole life policy in some ways, but you've got this money that's working in the market on top of that. So they might give you illustrations that have, what it would look like if the market did a certain thing over the time of your premium. So, just some things to look at there with life insurance. But look, one of the things that I hate to see with people today is that a lot of people pass away and they don't have any of these protections in place. And then what happens is that people go out to GoFundMe and they try to raise funds to pay for the funeral costs and all these other things, where, look, if we have a life insurance policy, we're set there. We know we have money coming in and we're taken care of there, moving forward. So life insurance is another one of the key components. estate planning. This is a big one. Like, I'm really surprised. Like, I see like people like Aretha Franklin or Prince or some of these people who have huge estates and they don't have an estate plan. So their assets tend to go to probate in those situations. So probate is letting the government decide where your money should be allocated if you die. Now, I don't know if if you're like me and I don't want the government to decide that, because how are they going to know where I want my money to go or who the best people to go? They're just going to do the best they can with the information that they have and make this decision. I would prefer that they not do that. So I want to make sure I have an estate plan. And part of that estate plan is maybe having a trust where, since my kids are still younger, they still all live at home. If my wife and I were to both pass away at the same time, we have life insurance that would go into a trust, and then that trust would disperse that money over a period of time, right? Like, the last thing I want my kids to have is like, $1 million that just falls into their lap, and then they're just, they're 18, 19 years old. I mean, what are they going to do with that? If you'd given me $1 million when I was that age, I promise you, I'd probably piss that away in pretty short order, right? And it would be surprising how quickly $1 million can disappear, right? So, so we have some of these contingencies in place. We also have contingencies on who takes our kids if something were to happen to us, who's going to raise them and take care of them. And, you want to see how, your spouse really feels about your family. And if you're not sure, this is the conversation to have, and you'll start to find out how they really feel about your family when you decide, where do our kids go if something happens to us. So, it was a real eye opener, for my wife and I to see, what do we really think about our families, and are we comfortable leaving our kids with certain family members and those kinds of things. So, so estate planning is really critical, and it's often overlooked. I still talk to people today who are like, oh, I don't have an estate plan in yet. And really having a medical directive, all those kinds of things, right? So, hey, if I'm on life support and I'm brain dead, I've got a medical directive that just says, hey, pull the plug, do not try to, do not let me hang around for months and years on end, just sitting in a vegetative state in a hospital. Just pull the plug, take care of it. So, estate plan, having that foundation in place is so critical for business owners, especially because you've got a lot of different things to consider: your business, all your assets, all those things. What happens to those things in that process? The other thing about a proper estate plan is figuring out ways to leave money to your heirs tax-free, right? And the reason why I say that is not because I want to be a tax avoider, but that money that I have there, I already paid tax on it. So it's already been taxed. Now I'm going to get it taxed again because I died and I passed that along. And, depending on who's president, what's going on at that period of time, my tax rate is going to be, vary up and down depending on who's in office. So get your estate plan in place and do that as quickly as possible. Other protection. There's a couple other things as I go through this that I want to share with you. Disability and long-term care, depending on what industry you're in, disability can be really reasonable. And, that's a valuable protection. It's probably one of the most utilized protections is disability. I think last time I looked, 1 in 3 people become disabled for an extended period of time in their lifetime. There's a very high likelihood that you're going to use disability. Now, for some industries, disability coverage can be really expensive. It can be very hard to get. So you may decide, the premium's just not worth that. But for other people, I've seen some really reasonable disability policies written and given to people that have given them that added peace of mind and coverage in case they're not making an income because they're disabled. Long-term care. This is why I like whole life insurance. There's a lot of long-term care riders that you can purchase with a life insurance policy that's whole life. And so having a long-term care rider is just, again, it's very unlikely that you'll use long-term care, but in the event that it does happen, I've seen some really not great things happen for people who don't have long-term care. I saw a family here in Utah where I live where their mom was in long-term care. They told them that their mom was only going to be in this facility and probably only going to live for a couple of years. Well, she lived for 10 years. The problem with that is you don't want to be sad because your mom lived 8 years longer. And I think for some of these kids in the family, they started to get stressed out because they did a reverse mortgage on their parents' property. They started paying for the long-term care facility through that. That money eventually ran out. Now they don't have this asset. Now they're trying to figure out, how do we pay for long-term care for my mom while she's still alive, even though we were only planning on her being around for 2, maybe 3 years. Now she's been around for 10. Crap, what do we do? That puts people in an enormous burden. And think about this. You shouldn't be in a position where you're sad that your loved one lives longer because of the financial ramifications of that. And that can happen if we don't have the right coverage. So other protection things to look at. And then the last thing I want to just end with is tax planning. And tax planning is one of those things. It's probably the number one thing that I hear from business owners, because they're obsessed with like paying as little taxes as possible. But here's the thing I want you to know. First of all, there's nothing fundamentally wrong with paying taxes. Like there's, in terms of like, because it's the law, right? Like I'm a libertarian. Like I would prefer to pay 0 taxes. Like that's kind of how I feel about it. But there's laws around how much we pay in taxes, and we need to honor those. And so if you have to pay more, it's usually because you made more money, and that's okay. But if there's ways that you can minimize your tax exposure, I would definitely recommend looking into those things and utilizing those things. How your business is structured as an entity is one of those things to look at, and making sure that you have the right entity structure in place for tax planning. But there's a couple of things. There's like 3 specific tax planning tools that I want to talk with you about that can really help you minimize your exposure, that really don't cost anything to do that, and are really simple ways to reduce tax exposure. So one of those is the Augusta rule. And the Augusta rule is basically you can rent your house up to 14 days for business use, right? This could be company parties, company retreats, team meetings. You can do that for up to 14 days, and you can pay that money to yourself tax-free. So the Augusta rule. So talk with your accountant about that. The second thing is paying your kids. I think you can pay your kids up to like $12,000 now in any year without incurring any sort of tax on that income. So they can make up to $12,000 tax-free. You can pay your kids to do that. Now, the caveat with this is this. All of these strategies have to be legitimate. Do not pay your kids for working for you if they're really actually not doing anything for you. That is illegal. You'll get in trouble for that. I would not recommend doing that. So they need to be legitimately doing work for your business. But there's things that, for my kids, my oldest daughter has a camera. She's done photography classes. I've had her take photos at events. I've had other kids who have helped at events where they've passed things out and done kind of general administrative things and answered questions for people and really been helpful to me in putting together a workshop or an event. So I'll pay them, maybe $15 an hour to help at an event. Or, if they're doing photography, I'll pay them like, what is a going rate for a photographer, and not getting too crazy with it, not like $1,000 an hour or anything, but, just coming up with what would I pay to have an event person come out and take photos and capture the event. So there's some things you can do there. Now I have 4 kids. I mean, that's $48,000 that I could pass through to myself, to my kids, tax-free, that we can use for things that they want to do and utilize and things like that. So that's a good strategy to consider. And then the last thing is research and development credits. So depending on who you are and what kind of industry that you work in, looking into your research and tax development credits, research and development tax credits can be a really advantageous thing. Now, here's the thing about this. The reason why you don't hear about this is there are so many credits. There are so many benefits that the IRS gives to business owners and people in general. It's too hard to keep up with all those things. I mean, I think the tax code has gone from, it used to be like, I don't know, 40,000 pages, and now it's like over 1 billion or words. Like there used to be like 40,000 words in the tax code. Now it's like 1 billion, in the tax code. I mean, that's a significant increase. There's no way that people are going to know that. So we have experts that work with us on research and development tax credits for our client to find where they may have some things going on there. Now, if you are making over $500,000 in net income for yourself in a given year, this is the time for you to start looking at even more advanced tax strategies for yourself. And the person that maybe helped you get up to the tax place that you're at now is no longer useful in that regard most of the time. You want someone who works with higher net worth and higher net income individuals who can find you the tax strategies that are going to benefit you and make sense for you in that tax planning arena. So there's a lot of different ways that you can minimize your tax exposure that are really easy to do, really simple, not complicated, that the IRS has given provisions for you to be able to do that. So those are things to look into to kind of minimize your tax exposure that way. So now that you kind of think about this, think about your plan. Do you need to relook at your liability? Do you need to look over your life insurance, your estate plan, your health insurance, any of those kinds of things? Take a look at those. And I didn't really go over health insurance because health insurance is one of those things where you kind of either go through the marketplace or maybe you do a medical co-op, but there's really not a lot of creative options out there for health insurance. Maybe you could do a captive insurance policy, something like that. But as far as, health insurance goes, I mean, you either get a policy through the marketplace or you get a medical co-op. I mean, there's really not a lot else you can do with health insurance at this point in time. So put together your plan. What does it look like? Where are you exposed? And here's the thing, as part of your plan, you should be meeting with your professionals at least annually, and your accountant, you should be meeting with them on a quarterly basis, going over your tax situation and where you might be exposed and what you can do moving forward. So that's something to take a look at and think about. Like, am I meeting with my professional team on a regular basis in this process? So the last thing I want to leave you with is a little life insurance quote, because who doesn't like a good life insurance quote? Life insurance is a mitigation to the risk of your life. Financial freedom is a mitigation to the risk of living your life. Choice has always been yours. So, check that out. Think about that. What does that look like for you? And then look, where do you have some exposure there in your plan? Where can you put your plan together in a more structured, seamless, worthwhile way so that things are taken care of and ready to go for you, so that if something happens, your assets are not at risk. Your ability to produce value is not at risk. You have taken care of yourself and your family for the long term. So thank you guys so much for being here today. If you guys have any questions about any of this stuff, financial related, please do not hesitate to reach out to me. I would love to connect you with any professionals that we know in these areas to help you make sure that your ducks in a row are in a row with regards to your personal finance. So next time, we're going to talk about investing, and we're going to get into the investing side of personal finance, and we're going to go through and unpack that and talk about that next month. So thank you guys so much for joining us, and we will talk again next month. Take care.